Welcome back to the Smart Mortgage Show. Glad to have you. I'm Ben George with Bill Litton of Cross Country Mortgage. And today we're talking about a topic that is really, I guess, blowing up across social media. If you're, doing any search on message boards, Reddit, you're on social media somewhere talking about and looking at home ownership and mortgages. Escrow shock is a real thing right now. And Bill, I'm experiencing this too because my escrow, my mortgage payment has been going up, went up pretty significantly the last year. So this is hit me too, but it's hitting a lot of people right now.
Yeah, I'm noticing this a lot. A lot of our clients are coming back and asking, why did my payment go up? What happened? And it's always because the taxes or the insurance increased. But, how can we prepare our clients to make sure that they're ready for these types of things? Because they're happening more often.
So I know when people budget for a home, Bill, they look at the mortgage rate and they look at the cost of the home, and that's kind of their whole idea of what they're gonna be paying, right? That's kind of what their whole basing their whole monthly payment around.
Yeah, I think, the principal and interest portion of the payment tends to be a focal point. We're always pointing out the taxes and the insurance. And I've seen so many lenders miscalculate or misrepresent the taxes and the insurance to make their payments and closing costs look lower. I can't tell you how important it is. In fact, Ben, let me rephrase that. I can tell you how important it is, and I say it all the time. You got to be working with the right people that are going to be fully transparent and maybe even beyond transparent. It's almost a planning for the possibility of these increases and being aware of what that might look like.
So explain how this happens then, Bill, because I think a lot of people, beginning of the year saw their mortgage payment from whoever their mortgage lender was, and they go, wait, I thought I was paying this. Why is it up? In some cases, 10%, 15% for some people. So how does that happen?
So one of the things that we're seeing across the country is insurance costs are increasing. Homeowners insurance companies are re-rating. Now, think about it. These property values have increased dramatically over the past few years. So now, with all of the inflationary pressures and the inflation within the housing market, when the insurance companies are paying out, they're paying out claims amounts dramatically higher than what they were. The only way that an insurance company can keep up with the increased claim amounts is to increase the premium. So we've seen premiums increase by 50 or 60%. So one of the things that we do to try and help the customer get the most accurate payment possible is to put a placeholder in there that's based on what we see, and then include some notes too. Talk to your insurance agent before you get under contract. Get them involved. Have them run some quotes for you. Understand unique properties or old, like homes built in the 17 or 1800s. Those materials are hard to come by, so those are going to have higher amounts naturally. And also provide some resources where they can shop a little bit, to talk to some really good professionals who have great companies and carriers to offer great rates to try and make it affordable. And that's just on the insurance side.
Yeah, that's the reality there too. And I think, the big surprise is that, hey, even if I'm still sitting on my 3% mortgage rate from, 5 years ago, I can still be seeing some big increases in my monthly cost, can't I?
Yeah, you really can. And by the way, I feel like, on the tax side as well, as these values increase and you apply the common level ratio, real estate taxes have been increasing. Ben, we live right on the state line of Delaware. I'm in Pennsylvania, but I'm a couple miles from Delaware. And historically, Delaware's taxes have been very affordable, but in ratio and proportion in recent years, they've increased dramatically. And people that have moved to Delaware over the past few years, who have moved there for purposes of lower taxes, have been unpleasantly surprised by those increases. And I think it goes back to planning with a professional that tries to keep you within a payment range and is talking about your budget and making sure that everything is within your budget. And by the way, when we budget, you always have to leave some room in the budget for the unforeseen increases and the unknowns that pop up, which these are two things that, you know, certainly, you know, we didn't predict this 10 years ago, but what we can predict is there's always going to be an unforeseen item that hits your budget, and you got to have some space in there to take care of the increasing costs that you didn't plan for. Plan for the unforeseen events.
Well, I think too, one reason why this is a big shock too, Bill, and you can kind of explain how this works for a lot of people, because escrow isn't the easiest thing to understand. But when we come to a new year like this, where, let's say your taxes went up and your insurance went up, escrow is not just factoring in, okay, here's the difference in that moving forward. There's also you've got to make up the difference from before, also building some buffering. So the number is actually usually bigger even than you would expect, isn't it?
So, Ben, you hit on some really fantastic points. The taxes go up and the insurance go up. And now we're not only making up for the future amount that's going to be higher, but the amounts that were delinquent in the past. And technically they're paid because the lender's going to pay them for you. They don't want you to be behind. But now there's a deficit in the escrow account. So taxes and insurance, we're in a world where both of those things are increasing at a rate much higher than standard, and you're making up a deficit and planning for the future. Add all that together, that can be a pretty big hit to your budget.
Yeah, it can. And I think that's what a lot of people are experiencing right now. So, Bill, if you are a buyer and maybe a little nervous kind of hearing this, or maybe hearing some stories or reading some stories online, is there anything you can do right now to protect yourself from getting blindsided, at the closing table, or even, hey, a year or two or more down the road?
Yeah, I think that what you're going to want to do is work with a really great real estate agent, right? Work with a really great mortgage lender. They're going to help position you best for number one. Here are all the numbers for when you go to settlement. This is what the payments are, the cash to close. They're going to be really accurate, and they're going to spend time, energy, and effort to give you accurate information to make good decisions, pulling property specific data, going to public records, looking at flood zones, making sure that you're not getting under contract and now you've got to add flood insurance. So massive value add here for getting the right real estate agent and the right lender. And oh, by the way, if you've got a good financial advisor, you run all this by your financial advisor and make sure it fits into the plan. So that is your best way, is relying on expert level resources to guide you through this process.
So if you are, Bill, also beyond that, if you are someone that's the current homeowner now then, and kind of dealing with this currently, is there anything that you can do to help maybe ease some of this financial pain you're feeling?
Yeah, unfortunately, with insurance companies, loyalty doesn't really mean anything. And let's just say that Homeowners Insurance Company A has a re-rate and they go up 50%. I've seen it happen. This is not uncommon. And you say, man, I've been with them forever. How could they do that to me? Well, let's take the emotion out of it and let's shop with companies B, C, and D, because there's a chance that one of those companies does not re-rate your house the same way, and you can still get an affordable policy, keeping it in line with your current policy. Also, tax-wise, there are instances where you might be able to have your taxes looked at. You go in front of a board, and maybe you could actually lower your property taxes. That process is something that you could work with your real estate agent, and not just a general real estate agent, your expert level elite real estate agent. And I work with a lot of them. If you need a referral, I have a lot of great people I work with, but they're going to actually help you to understand, is it worth it to go through this process? And if it is worth it, they can direct and guide you on how to have your property taxes lowered, if that's an option.
All right. So a lot to chew on, a lot to think about, but there is some good news in all this escrow shock as well. But better understanding it is the important first step. And hopefully this video has helped you with that. If you want to get in touch with Bill, hey, if you're a home buyer, maybe ready to kind of move forward, understanding your options for lending and hey, what's some things I can be doing right now to put myself in the best position moving forward, you can always get in touch by texting the word LEND to 21,000. Also, check us out online, smartmortgageshow.com. Again, all that is in the show description as well for you to make it easy to find. But we appreciate it. As always, Bill, your information here into this idea and this kind of stressful situation for many Americans right now. But as always, we appreciate it. We'll look forward to talking to you again right here on the Smart Mortgage Show.
Thank you so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.